Talk a little bit about all of the new guidance and regulation coming out. I know there's been a lot of changes. There's also been a lot of misinformation out there. So I just wanted to clear up what's changing, when it's changing, what this means for you, and then also talk a little bit about strategy moving forward, and what we are talking about with our clients. So I just wanted to whiteboard everything out behind me so that I can kind of break it down very simply. So there's really two main categories here: custodial brokers, centralized exchanges, and non-custodial brokers, or DEXs, right? Or platforms, middlemen, whatever you want to call them. And there's like a few changes that are coming out. So one, we'll talk about wallet-based cost tracking. So this is really applicable for Revenue Procedure 2428. You might have heard that word thrown around, or safe harbor thrown around. And so what this means is prior to 2025, so up through 2024, taxpayers were more or less allowed to use universal cost tracking, meaning all of their tax lots were just viewed at in one big pool. So you could sell something on Kraken and you could pull a tax lot from your crypto held on Coinbase, let's say. So that's called the universal method. Wallet-based cost tracking is where you have different pools per wallet, right? So your Coinbase assets, if you sell something on Coinbase, it has to pull from the Coinbase pool. It can't pull from the Kraken pool, so on and so forth. So essentially, if you were using the universal method before, you had to switch over and migrate to wallet-based cost tracking. There's the safe harbor word. And so you had like global allocation method available to you, or specific unit allocation method. And so really it's just a transition to wallet-based cost tracking. So in 2025, for both custodial and non-custodial exchanges, it's required. So I just wanted to clear that up. There's some people are saying, oh, it's been delayed. That's not what's been delayed. Hint, this is what's been delayed. We'll get to that later. But wallet-based cost tracking 2025, right now, it's required. You should have already switched over, or at least outlined your method. And so moving forward, we will be required to track at the wallet level. Moving on to 1099 DA and what's going to be reported to the IRS as well as to us is starting with proceeds. So this new form, the 1099 DA, is effective for the 2025 tax year. And so on this form in 2025, custodial exchanges will be reporting cost basis. Sorry, not cost basis, proceeds. So whenever you make a sale or a swap, the fair value of what you're receiving, whether it's cash or it's a different crypto asset, the fair value of what you are getting is going to be considered proceeds, and that will be reported on the 1099 DA for this tax year, so 2025. For non-custodial, so for DEXs, this is not going to be in place until 2027. So there's a few more years for these exchanges to essentially put together some sort of infrastructure to comply with this 1099 DA reporting, and they will be reporting that starting in the 2027 tax year. So just to clear things up, the 2025 tax year means we won't be receiving the 1099 DA until 2026. So it's effective this year, but you won't get the 1099 DA until 2026 once the 2025 tax year finishes up. Okay. So then cost basis reporting. So this is different than your proceeds. Your proceeds is what is the fair value of what you are receiving. The cost basis is the cost of the assets you are disposing of. So what you initially purchase them for, or so on and so forth. So cost basis will not be included or will not be reported on the 1099 DA for centralized exchanges or custodial exchanges until the 2026 tax year. So that means that they're not going to be reporting anything. It's just going to show up as blank for the 2025 tax year. But starting in the 2026 tax year, they will be reporting cost basis for assets that they know. Now, the big glaring issue here is that if you transfer assets into an exchange and you don't tell them what the cost basis is on those assets, they won't know what to put there. So they're going to put a 0 or they're going to leave it blank, which means if you're just handing that to your CPA, chances are you are overpaying on your crypto tax there, because your CPA will just report a 100% capital gain unless they are really crypto focused and know what they're doing. So that's not going to be in place until the 2026 tax year for custodial exchanges. And for non-custodials, NA, not applicable. There is nothing out yet that indicates cost basis reporting will be required for DEXs or non-custodial exchanges. So that doesn't mean that can't change, but as of right now, there is nothing out yet that suggests that will be the case. So, we'll stay tuned for that. Now, you might have heard something about FIFO being required, right? FIFO is going to be required. You're only able to use FIFO. If you're not using FIFO, you're out of compliance. A lot of fear mongering going on. This is not quite the case. I'm going to break it up and make sure that you are aware of what is required, what isn't required, and how to strategize, more importantly. So essentially, in this tax year, in the 2025 tax year, exchanges were going to be required to, use FIFO as the default method unless you specifically notify them before the transaction is made of the tax lot that is being sold. So as you see here, FIFO is the default unless you notify the broker of the specific tax lot being sold prior to the transaction. So this is something that most 99% of taxpayers would not be able to utilize effectively for the majority of their trading. So you couldn't just go into your software, toggle on HIFO or whatever you wanted to use, or LIFO, and then call it a day. So this got delayed until 2026. Okay, so the 2026 tax year, when you've probably recently heard about some delay and a lot of misinformation was saying that it was the wallet-based cost tracking in the safe harbor that did not get delayed. What got delayed was the requirement for the requirement for exchanges to accept your cost basis essentially. So starting in 2026, the IRS will let starting in 2026, exchanges will have to use FIFO as the default unless you specifically notify them prior to the transaction, which tax lot is being sold. So what does this mean for you for 2025? It means that the IRS is granting you a safety net to self-report your specific identification on your 8949, for this year. So you have some safety here for another year or so. So even if you're trading on a centralized exchange, you don't need to use FIFO. You can still use specific ID on your 8949 for the 2025 tax year, and you don't need to notify anyone before the transaction is made. That's going to kick in 2026. Now, what about non-custodial? DEXs? So essentially, since DEXs are not going to be collecting your cost basis, they're not going to be reporting your cost basis, there's no way for them to, they're not tracking your tax lots. So essentially what this means is this implies that taxpayers will continue to be able to use specific identification on their decentralized exchanges without needing to notify anyone prior to the transaction. So you can still use spec ID on decentralized exchanges without needing to notify anyone beforehand. That whole notifying them before is really applicable to the centralized custodial exchanges. So on DEXs, there's actually going to be a significant advantage, a huge advantage, starting in the 2026 tax year. So what does this mean in terms of strategy? Well, one strategy would be, and this is something that we're suggesting this to a lot of our clients, not for this tax year, but moving into 2026. One strategy would be to, if you're trying to cash out into fiat, do your trading into USDC on a DEX, so you can still utilize specific ID without needing to notify anyone, prior to the transaction, and then take that USDC and transfer that into the centralized exchange, and then you can cash that for fiat. So avoid doing your trading, your frequent trading, or even infrequent trading. Just avoid doing your trading on a centralized exchange. And then if you want to cash out for fiat, put it into a stable like USDC and then on a DEX, and then transfer that into a centralized exchange and then cash that out for fiat. That's really going to help you avoid a lot of the headache of needing to notify them before the transaction is made. Otherwise, you're stuck using FIFO, and that could be really costly for you. And really, this just helps avoid a lot of that headache, because also you might have to, whenever you transfer assets in, you're going to probably have to report the cost basis on those assets being transferred in, And again, that's also a huge headache. If it's a stable coin, it's very easy. It's just a one-to-one, and then you do your reporting on your own on your 8949. So that's just one of the strategies we are suggesting, is if you want to avoid that headache, trade on a DEX if you know how, and can do so safely. Swap it for a stable, and then bring that into a centralized exchange. That's going to be a lot easier than having to report prior to the sale, whatever specific tax lots you are selling. If you guys want more help with this, or want to stay up to date on the changing guidance around this and the regulation that's coming out, especially as we enter into this new administration, definitely make sure to follow. We're going to continue making updates, continue making these videos, helping interpret all this noise and all this chaos, and breaking it down for you so that you can have some good, solid, palatable tax advice. If you want that, make sure to follow and stay tuned. Thanks for watching.